So you filed your taxes and you immediately moved on. Big mistake. You missed the most important planning window of the year. Quarter two is where good business owners and individuals harness their mistakes from the prior year and fix it before it gets too late in the year and their mistakes get costly for them. What's up, guys? Mike back at it again, CPA, co-founder of Ledgerly, bringing business owners and individuals the latest and greatest when it comes to strategy, compliance, and all things business for you. So if you love business as much as we do, make sure you hit that subscribe button and stay tuned for more videos just like this one. So this video is targeted for business owners. However, there's a lot of things in this video that could be applicable for individuals, maybe outside of just their W-2. So most business owners, most individuals, let's just call you the American taxpayer. You guys look at tax season as the finish line, but really once you file that tax return, it's really the starting line to make sure that you are doing things right going forward. Let's put last year behind us. What did we do wrong last year? And let's focus on setting ourselves up for success. And that's what this video is for. Quarter two is where we take that tax return and let's use it as blood work. Let's create that tax plan so then moving forward, we can implement some great strategies, some different structures, pay optimization, different systems for you and your business. So let's use this video as the reset for moving forward during the year. So why is quarter two so important? Let's get this visual on the whiteboard. Quarter two, why is quarter two so important? Well, from our prior videos, we know that quarter one equals compliance. Now, quarter four was basically the finish line for our year-end strategy, but quarter two, this sets the tone. This sets the tone for the rest of the year. Quarter two, quarter three, quarter four. Quarter two is going to wind into quarter four, and then making sure, well, we also got quarter three. Let's not leave out good old quarter three over there. Although it does get cold, it starts to get cold in quarter three. I'm wearing my nice and cozy what is this, Banana Republic little sleeve thing here, nice and cozy. Now listen, quarter two sets the tone for quarter three, quarter four, quarter one. Unfortunately, it's too late to implement any things that we can do in quarter two, three, and four. Yeah, maybe we'll say, hey, you can do your HSA, you can do your IRA, but those are small dollar amounts. Let's take it to the next level. Let's set that tone in quarter two to take advantage of maybe your structure, maybe your pay optimization as a business owner, maybe some different systems let's implement for you. So moving back up here, the first thing let's look at, right? Let's look at our structure. That's number one. What do we mean by structure here? Let's start with the basics. Let's start with the foundation. Did my entity actually help me? Here's a big common misconception. Everyone says, oh, I'm starting up my own LLC. My LLC is going to save me on taxes. No, LLCs do not save taxes. LLCs provide asset protection, as we've all known and preached in prior videos, and it also opens up the door for bigger and better and greater tax strategies that we can help implement and unravel for you. So no, an LLC does not save taxes, but it gives you the tools to open up the door for different tax strategies, right? So, hey, how are we structured? Are we a single member LLC? Did that kill us this year? Should we start evaluating a different entity structure? Should we maybe look at an S corporation if our profit is at a certain level? But hey, maybe our profit has been at that level, but our mindset as the business owner is to go back into a W-2 type job. Maybe the S Corp isn't right for you. How about the owner's pay? Are you an S Corporation owner? How much salary did you take? Was it too little? Was it too high? Let's look at the payroll matrix. Let's minimize that FICA because we all know and love FICA, right? No, just kidding. We hate FICA. We don't want to pay that Social Security Medicare tax if we don't need to, right? Let's keep that money in our pocket. And another thing, how about for you new S Corporation owners? Maybe you had a consult with us at Ledgerly and we showed you, hey, you're probably going to save $20,000, $25,000, $30,000 just by electing S Corporation status. But how about the payroll process? Was that a headache for you at the end of the year? Because we don't want to be creating headaches for you as the hard-working business owner. We want to give you the strategies that you could implement. Yep, you're going to save this much on taxes, but you also need to do X, Y, and Z to make sure we're in compliance for an S corporation, right? Was the payroll a headache? Maybe it was, maybe it wasn't. Was it ran on time? So yes, there are different strategies that we're going to help guide you through, but is the juice worth the squeeze when it comes to your time commitment with this, right? So this first thing, the structure is basically your tax return. At the end of the tax season, let Ledgerly or your financial advisor, your tax strategist look at your tax return and do that blood work on it. Let's do the blood tests on it and let's identify areas for improvement. Now, number 2, the pay. Let's look into the money movement. Now, maybe during the year, maybe during the prior year, you get uneven cash flow, surprise estimates, stress around the amount that you're taking out of the business. Can you do it? Should you do it? Listen, rule of thumb, people. Let's go back to the basics. Make a budget. Okay? Make a budget for all your fixed living expenses, your mortgage, your insurance, your gas, your groceries, and for you family owners, for your family members out there, wife, kids, the whole 9 yards, make a budget for them as well. What do we need to live? What do we need to provide and support for our family? Use that as our starting point, and then everything else on top is the goodies, all the extras, all the toppings, all the flavors that you might want to do. The flavors might be, hey, do I want to go on a vacation here? Or do I want to put $70,000 into a mega backdoor Roth IRA? Up to you, right? It's all preference. We can lead the horse to water, but we can't force you to drink the water, right? We can put the strategy on the table for you. But if you guys want to go to Europe for a vacation, fine, do it. You worked hard. But just know that we are going to tell you about all these strategies, but it's up to you to basically give us the green light to say, hey, yeah, let's move forward with these strategies. So when it comes to pay in quarter 2, let's go down here. Let's give us a little bit of room here. Let's go down to pay. Number 1, let's build a budget. Number 2, let's pay yourself. But number 3, don't suffocate the business. And what do we mean by don't suffocate the business? Well, there's actually 2 sides to this coin. If we don't do a budget and we start taking distributions out of the company left and right, and you're profiting $1 million, let's say you're bringing in $1 million, you got $700,000 of expenses and you got $300,000 of net income, but you're sucking all 300 of that out of the business to pay yourself, then yeah, we're suffocating the business. We're taking out all the equity, all the retained earnings out of the business. That's suffocating the business, but at the same time, if we're investing all of our profits back into the business, we're not paying ourselves, we're not doing number 2, and we are business rich and investment poor, because number 4 is take that surplus and invest it. Now, between 3 and 4 is obviously, let's take a look at our debt, like 3.5 here. Let's take a look at our debt. Let's get rid of all the low-hanging fruit for debt. Let's get rid of that stuff. And then let's take the difference and invest it, right? Let's pay ourselves an investment. Hey, can we do a solo 401k? Let's invest it. Can we do some real estate syndications? Let's invest it. Do we want to do oil and gas? Let's invest it. Do we want to do a brokerage account? Let's invest it. Take the surplus, invest it into your future, your family's future, your kids' future. So suffocating the business could be a 2-sided coin. It can be you're taking everything out of the business, suffocating all the retained earnings, or you're leaving everything in the business and you're business rich and personally poor, cash poor, investment poor. 2-sided coin. But let's resolve it. Build the budget, people. This is a messy whiteboard, but use that budget to your advantage. Budget, pay yourself, don't suffocate the business, and the rest is bliss. Look, business ain't going to be perfect. Personal life is not going to be perfect, but let's be intentional about these decisions, right? Okay, number 3, our systems here. Cool, we're cruising along. Our systems, what does this mean? So we talked about quarter 1 is compliance. Quarter 2 sets the tone. What type of systems do we have in our everyday life, in our business, let's call it? Instead of scrambling to the end of the year being like, I have a business bank account, but what's a deduction? What's not a deduction? Do we have QuickBooks, people? Are we invoicing through QuickBooks? For our customers? How about our vendors? How are we paying them? Do we have our W-9s? Are we giving them a 1099? Do we have a QuickBooks that we linked our business bank and credit cards to, tracking our income, tracking our expenses, tracking our business bank accounts, tracking our credit cards? Do we have any assets? Do we have any loans? How about our fixed assets? Do we have a set of books that is encompassing our entire business? If the answer is no, then don't ask yourself the question of, can I deduct this? Should I deduct this? No, it should already be in your QuickBooks, first of all. So your first business expense should be that QuickBooks fee that you're paying, right? Pay us or pay someone to set up QuickBooks for you to make sure that you can just open up your set of books, you do your transactions, and you already know what your income and expenses are for the year. That's where the strategy starts. We can't do strategy without systems in place. So First and foremost, for your systems, get a QBO, get a QuickBooks Online. Remember our LLC startup guide? If you're starting up your business, you do your LLC, you do the IRS side, you do the state side, that's step one. Step two, business bank, business credit card, that's step two. Step three, open up a QuickBooks, you're done, right? So get the systems in place. Now, how about your everyday life? All right, well, your business has a set of books. Shouldn't your personal life have a set of books too? Well, there's also this thing called a budget here, and I'm pretty sure there's a lot of things out there like Rocket Money or whatever, or Mint Mobile, whatever it's called. No affiliation with those. Just heard of them through the grapevine. But yeah, you can build a budget and then do a budget versus actual for your personal life too. So build a budget personally, have a set of QuickBooks for your business. Boom, love it. All right. Keep cooking, keep cooking, keep cooking. Q2 reset. Guys, we covered all three of these here, right? Structure, pay, systems, awesome. So Q2, we're resetting. We are looking forward. We are not looking back. Q2 planning is not about fixing last year. It's about fixing this year. Let's not wait until Q4 to make these decisions that we just talked about today. Great, you filed your tax return in Q1. Maybe you filed it in Q2 because April 15th is technically Q2. But let's not just take your tax return from your tax preparer. Let's do a sit-down, intentional tax plan for you as an individual, you as a business, you as both. Let's do that tax plan and let's set the tone in Q2. Let's set the tone at the top, like good management, right? Trickle down management. Let's do the same thing as a business owner, right? So set the tone for Q2. When Q2 is done correctly, it's going to be a big push. Kind of like for brand new S corporation owners, doing it at the last minute at the end of Q4. It's a big push, right? We got to file the 2553. We got to do payroll. We got to calculate your distributions. We're in Connecticut, pass serenity tax payments. Do you want to do a solo 401k? Did you do an HRA through your S corporation? How about your self-employed health insurance? Yes, the tax savings is great, but there's like 8, 9, 10 things that are crucial to get done before the end of the year. It's the same thing with Q2. Q2 is going to be a big push to implement those things. But then Q3 is essentially going to be passive. We're going to give you the tools to integrate this. Retirement planning. And things become intentional. Like here, we talked about. Pay yourself. Don't suffocate the business. Take that surplus and invest it. Let's identify that. Let's identify what we can invest after your budget. And lastly, let's not make Q4 chaotic. Let's start playing offense as business owners. Let's start hitting dingers. Let's not stop. Let's stop trying to pitch a perfect game against Sammy Sosa, Manny, Big Papi, Mark McGuire, Barry Bonds, because it ain't going to happen. They're going to hit dingers off of us. And guess what? They're the freaking IRS. We don't want them hitting dingers off of us. We want to be hitting dingers off of them. Guess I'm really showing my age of all these baseball players I'm talking about. But seriously, guys, if you want Q2 to be the calm before the storm, then we need to be intentional about it. We got to grab it by the you-know-whats. So help us help you. We help business owners map out this tax plan at the end of tax season. We look at their tax return and we become intentional about creating that tax plan to harness in on these three things that we talked about today. So book a consult. Let's dial this in because tax season doesn't end in April. It's the foundation and dictates on what you do next for you and your business. Don't suffocate yourself. Don't suffocate the business. Let's be intentional. And let's hit some dingers out of the park and crush Q2 together. We'll see you on the next video.